we have had the pleasure of really canvassing both the government and the private sector. And for our finale for the program today, I am delighted to welcome Senator Mark Warner to offer his insight. We had reached out to Senator Warner's office because he's really been for years an advocate for not only minority institutions, but as Chairman McWilliams had stated, really out of the box sort of thinking about this intersection of minority banks, conversations on technology. And I think an event like ours celebrating the future while also looking back could really benefit from his perspective. Senator Warner, thanks so very much for taking the time out. I know you've had a busy day on the floor.
Thank you, Chris. Thank you for having me.
Okay, great. I guess, when you hear and when you think about, and you've been obviously very pivotal in some of these CDFI, MDI conversations, maybe you can provide us with a quick overview as to how you've seen the conversation generally evolve. We've been tackling all the different kinds of pain points throughout the last 2 hours, but how have you seen from your perch on Capitol Hill in the Senate, the conversation and the thinking about not only the role of these institutions, but really the strategy in terms of addressing the varying strategic needs?
Well, first of all, Chris, thank you for your work in this area. Thank you for BEA's interest in this really, I think, critically important topic. Let me start by my interest in this space goes back to before I was senator, before I was governor. I was a venture capitalist. I saw the fact that, way disproportionate to population, we were funding a lot more folks that looked like me than looked like you. And access to capital issues were enormous challenge. Not because I would argue the Black entrepreneurs that I funded were, they were every bit as smart, every bit as talented. They just didn't have a runway in terms of that kind of access to capital. I say that as somebody that, my first 2 businesses failed. I got a third try. If I had not been a white man with the appropriate education, I might not have had a third try or a second try or a first try. And so I thought that was both kind of morally wrong, but just, don't have to take moral views just as from a how do we engage our whole community, just a numbers basis. If less than, 4% of all venture money goes to Black and brown communities, less than 10% go to women. When you got a population that's majority women and, between a third and 40% people of color, that's a bad business plan. And I saw somebody in Virginia where I did, some banking with one of our oldest, MDIs, the original Maggie Walker Bank down in Richmond. We saw so many of the MDIs kind of get washed out in the 2008, 2010 crisis. And there was not, I think, the government's response at that point was not sensitive to those disproportionate number of banks that we lost that were MDIs. So as we move forward, and we saw COVID, we've had, I think, a combination of 2 or 3 things. One, we again saw COVID disproportionately hit communities of color. We saw again, when the government tried to respond, and I think well-intentioned, at least with the initial PPP program, that initial PPP program, as you and your audience knows, was distributed through traditional banking institutions. And if you go back to, again, particularly Black-owned businesses, where we lost 440,000 of them last year. The irony is that Black-owned businesses are the epitome of the American dream because most of them have bootstrapped themselves totally up, borrowing from friends and family. They didn't have, they didn't go get a loan to start. So their failure to have those traditional banking relationships meant they didn't get PPP funding. Mm-hmm. And then on top of that, I think we had, finally a beginning of a racial reckoning in terms of systemic racism with the murder of George Floyd. So I think there was this moment in time where companies, banks, and others were interested. I had got involved with CDFIs back when I was governor, so I had some familiarity, but I was by no means an expert. And so last summer, put together something called the Jobs and Neighborhood Investment Act, recruited my my friend then Senator Kamala Harris and Cory Booker and Chuck Schumer and your earlier speakers. I was proud to be your wingman, Maxine Waters, who's been fighting these issues for.
She in turn had shouted you out.
Well, she is a great partner, and she brings a great energy and fire to these issues. So we kind of came together, and in the December bill, it was a great piece of sausage making. I'll just leave it at that. We got $12 billion in recognition of the fact that some of this needed to go into direct grants. Some of this needed to go actually into tier one equity. My pitch, and I got 6 Republican senators, and my friend Mike Crapo was a big supporter of the then banking chair, was that we need to do more than just prop up some of these institutions short term. We've got to increase the capacity because, as we know, doing lending in low and moderate income communities, the amount of due diligence you got to do on a $50,000 loan is oftentimes the same amount if you got to do on a $150,000 loan, yet your spreads are much more narrow. So we got to find a way to increase the capacity on CDFIs. So that's where we came up with this $3 billion grant, $9 billion tier one equity investment. And, knock on wood, I hope we're going to see it successfully implemented.
One of the focuses and one of the themes of this particular conversation today has been precisely on that recapitalization effort, and obviously making sure that banks have the resources for their customers in very diverse communities. But it's also obviously this technology question, and how do you to what degree can technology provide a solution in a world where you have small deposits? Obviously, when you look around the world, you have lots of people struggling with similar kinds of questions and strategies of leveraging technologies for either underrepresented or marginalized or historically marginalized communities. I mean, you're really out front thinking about technology. When you put on your technology hat or your VC cap, and you think about MDIs and the challenges facing them in a post-pandemic economy that's gone digital in the last year. I mean, how do you think about the role of the government or your goals? Now that you're starting to introduce more capital for the MDIs and CDFIs, and you start to think about this sort of next tier or next series or sets of challenges that many of them may face now that, again, so many other institutions have gone fully digital or may have certain kinds of capacities that some MDIs and CDFIs may not possess. I mean, where does technology fit into your thinking?
And that's a great question. That is a really important question. And let me kind of break it into 2 or 3 chunks. The first is, and some of my colleagues, on the banking committee, some of my progressive colleagues have almost, I think, a knee-jerk anti-reaction against fintech. And there have been some bad actors in fintech, but I don't think we can, the proverbial throw the baby out with the bathwater, because, fintech, particularly for the unbanked community, there's some good ideas there in terms of use of technology. So, but and I think you immediately pointed out, CDFIs and MDIs, who've traditionally been cash constrained,
right,
are both saying, well, hold it, don't let the fintech guys come in and steal my market and not have to do any bricks and mortar. But at the same time, don't, tell me how to run my business. And if I don't have the money, to force me to do a technology upgrade. And I think this is that's why I know you had, I think, my friend Robert Smith on earlier. Robert, with Vista, and boy, you talk about a platform that has helped revolutionize IT. If Robert or others can help with some of these products at a discounted rate, the CDFIs and MDIs, because I think what's happened has been many times. And Robert brings a unique perspective because he's not going to try to steal business. I think there's been sometimes some CDFIs and MDIs, when you get a big SIFI bank up here, sometimes they are less than respectful, to be politically correct on my description, and and frankly, they look down upon some of the CDFI, and there's not a partnering relationship. It's a resentful relationship. And so how do we take this moment when from SIFIs to regionals to even our community banks, they've got at least they're paying lip service to this issue that they've not even paid much lip service to. How do we not blow this moment to get the technology assistance in a way that actually helps? And I think this is where the CDFI fund can be of value. I'm really interested in what Chair McWilliams with the mission fund. I mean, I'm keep prodding her. I want to get that. We got the consultant. Let's get the lawyer. Let's get the darn thing out and get it funded. I want to go back to the SIFI banks and the bigger guys and say, all right, guys, if I had to read one more time about what Goldman or whoever else has done, no, show me. And put real capital, and a big piece of this is that technology assistance. And I would welcome, I almost feel like this is a case where if we had the delivery mechanism, I can go find the money, but we got to find the delivery mechanism. And that's, again, where I think an organization like BEA, could potentially bring talent to the table and expertise to the table that would be helpful, that might be more collaborative than some of the old guard. Does that make sense?
Yeah, you've touched on really about 4 or 5 big themes that we've had today, and as you had mentioned, Robert Smith was very much focused, on the question of technology and how do you sort of focus on upgrading. He had a special attention for loan management, operations within a bank. I have a real sort of curiosity, in sort of the next generation sort of set of issues. And, when you look at financial institutions deploying open banking and alternative data, big data, blockchain technology, et cetera, when you look at that, those kinds of issues, and then you look at your traditional MDIs and CDFIs, and particularly under-resourced institutions, some of which are still paper-based, or where an Excel spreadsheet is kind of advanced. The question is, even once you provide access to capital, how do you make sure that they're situated in a way to be able to succeed? And that kind of brings together many of the observations that you're having and sort of communities that don't always talk. And then the last issue is, like, you've had a kind of pairing with larger financial institutions and larger banks. Is how healthy are those partnerships, and where and in what way can they be upgraded?
I think, let me just, I want to steal all your other guests' thunder, but Greg Meeks has got some really interesting ideas on how, frankly, and I've been talking to our friends at the Fed, how they can actually incent some of the larger banks to put more deposits in MDIs and CDFIs, how we can maybe give some reg relief there. I think there's a bucket of things we can do in that category. We can take some of this technology assistance. I actually think there's another, in addition to the $12 billion, there was another $10 billion that was put in. It's called the SSBCI, Small Business Something Initiative. A lot of flexibility of that $10 billion to the states. Virginia's got $180 million. I'd love to take a slug of that and have it for CDFI MDI loan loss reserve fund. So that how do we make that $35,000 to $50,000 business loan that's got some, maybe some hair on it, but how do we make that a profitable venture for CDFIs and MDIs who, frankly, sometimes, aren't taking as many risks. And as you said, boy, they're trying to, even if they get more capital, are they going to get the right partnering to get the back office upgraded?
That's right.
But there's a window here because there is interest. And I would argue, if we are still, shame on all of us if we're at the end of this calendar year and we don't have a better solution. We need to get this equity out. We need to get the mission fund out. We need to hold the bigger banks accountable. But this back office technology assistance, I am wide open for advice and counsel on how to do this better. And I'll ask. I'm not shy.
Well, we will too, and we will. I know on the behalf of Georgetown and the BA, we're here to help in any way. Senator Warner, thank you. I know you're extremely busy. I know you are very busy today.
Well, I'm going to run back down to an intelligent.
I know you are.
And I'd love to tell you and your audience about it, but then I'd have to kill you all. So I can't,
Well, please, whatever it is, please don't kill the bank. Well, I guess we're not bankers, but in any event, thank you for letting us celebrate Juneteenth with you. Thank you for letting us learn from you. And we really do appreciate your time. To everyone watching, this kind of event is not possible without many partners. I wanted to thank David Clooney, Marie Kasperick, Ramel Simone, Lauren, Stephen, everyone for their critical assistance in making the program a success. And we'll see you all again in October for FinTech Week 2021. Thank you.